This is a story about Mr. John. Mr. John was able to repay his debt faster, quicker, and was able to move towards financial freedom. Mr. John was like most of us. He had credit card loans, he had student debt, he had car payments, and he had mortgage. So how was he able to get out of all of this and move towards financial freedom? Let's see how he tackled each one of these type of loans individually. Mr. John started with credit card debt because he found out that this was the type of loan which carried the highest interest rate and was the most easiest to deal with. So what he did was that he analyzed and he found out that he has missed some payments just because he forgot. And what he did was he established auto repayments for his credit cards so that he never misses any payment and there is no additional charge. Apart from this, what he did was that he analyzed his usage pattern. He found out there were a lot of expenses. For example, he had a gym membership. He hardly went to gym. He had bought some online services. He didn't need those. He was spending too much money on lunches and snacks and all those things. He could have managed that better, and that's what he did. He managed those better to reduce his overall credit card debt. The last thing he did was a very smart move. He tried to use the credit card to his own benefit. And how he did this was he analyzed what the benefit the credit card offered. If there was a good cashback or a good point system on fuel expenses, he tried to use the specific credit card for fuel. Or if there was better or more points on groceries, he tried to use the credit card for those expenses and maximized his benefit. Next, he moved on to student loan, and he chose this as the second option because it really irritated him. Since he was young, he was paying for these. And how he tackled this was he first of all applied for a payment suspension. The government allows payment suspension for a certain period of time. He did that so that he could accumulate a little bit of cash and he could think through and analyze what he needs to do. After that, what he did was that he found out that if he was able to establish auto payments on his student loan, he would be able to reduce his interest rate, probably even get a better interest rate, and that's what he did. This straight away helped him in reducing his interest payment. The last thing he found out was that after dealing with the credit card problem, he was also able to refinance the loan. He was also able to pay more on this type of loan because he was saving from the credit card expense. So he applied for a refinancing where he committed to pay a little bit more. This little payment shaved off a lot of months from his overall tenure. Once the two most difficult and most irritating type of loans, which were the credit card loan and the student loan, were dealt with, he moved on to his car loan. So the first option he came up was to just simply negotiate with the bank and the financer that maybe they can reduce some payments, maybe they can offer better interest rate or whatever. Unfortunately, this strategy failed for him. So he tried to apply for refinancing. When the options came in front of him, he was not too impressed with the option. There was not a major reduction in his interest rate and the payments, but the hassle against that was a lot. Finally, what he decided was to get a cheaper car because he really didn't need the large SUV. He wasn't doing any off-road trips or anything. This was a big step for him because the car loan saved him a lot of money. Once he was able to get a cheaper car, there were two savings. First, there was a lower car payment, and then he was saving on the fuel also. So these two savings really helped him in the final stage, which was reducing his mortgage payments. What he did over here was very smart actually. First of all, he looked at refinancing, whether he was able to lower his interest rate or not, and lucky enough, because of reducing his car payments in the earlier section, he was able to have a better credit score, and this helped him lower interest rate through refinance. Next, what he did was that he decided that he will make larger payments towards his mortgage, and the bank allowed this. Every contract generally has a specific term that you can increase your payments by X dollars every year. This is what he chose for, and this shaved off quite a few years of his mortgage payment and saved him a lot of money in terms of interest payments. Lastly, what he did was that he reviewed his home insurance. He got quotes from a lot of different companies and he was able to make a significant reduction in his home insurance. So this is how he was able to save money on his mortgage. I think we all should learn from Mr. John. He acted very smartly. He was in a very difficult situation. He was irritated every month. There were so many payments going out and he was frustrated about all of this, but he didn't give up. He analyzed the whole situation and he made a plan of how he will tackle this, and that's exactly what he did. And it all worked out very well for him, and he was able to get out of this, and now finally he has been able to pay more towards his mortgage, and soon he will be out of the mortgage as well. Once that is done, he will be on the path towards investing all this money towards some index fund or 401k or whatever, to build up assets and get out of liabilities. So I think we should all learn from Mr. John. And please let me know, how did you people deal with different type of loans? Were you able to repay them faster or not? What strategies did you use? Please let me know, and don't forget to subscribe. Thank you.